Hey guys, hope you're doing well out there. Time to take a look at Intel Corporation's shares dropping nearly 12% on the heels of their Q4 2023 results. This past quarter was actually surprisingly okay, but the guidance for the upcoming Q1 and then full year 2024 was shockingly low. We'll jump into that. We'll take a look at it from a broad-based perspective, see whether there's really better opportunities out there. We'll take a look at their different business segments, and then as always, jump into the stock chart. This one has been rallying, but has it been part of a broader rally that we've seen in all semiconductor names? We'll take a look into that. As always, if you're new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of Intel getting absolutely hammered, down nearly 12% on the day. Their Q4 revenues coming in at $15.4 billion. That was 10% growth year over year. That also beat expectations by roughly $230 million. And a non-GAAP EPS coming in at 54 cents. That again beat expectations by 9 cents. So why is this shares dropping so heavily? That's because they're forecasting first quarter 2024 revenues to come in at 12.2 to 13.2 billion. Consensus estimates were near 14.2 billion. So on their midpoint, they're basically $1.5 billion short on their Q1 guidance on that revenue side. And then they're expecting first quarter EPS come in at a non-GAAP number of 13 cents. Consensus estimates were closer to 32 cents. That is a huge miss on that EPS. This company has a few segments: client computing, data centers, network, and a now foundry business segment. Some of them are doing fairly well. The others are clearly absolutely losing market share out to NVIDIA and AMD. And then some are growing rapidly, but are losing them a ton of money. We'll jump into these segments in just a second. But first, let's take a look at the price return over a year. You can basically see that Intel has kept up with the broader based SMH ETF, which tracks a bunch of semiconductor names. And so over the past year, basically has kept up with that ETF, but you stretch it out over any longer length of time. Over 3 years, Intel has underperformed both the S&P and significantly underperformed the broader based SMH ETF. And then same story for 5 years and 10 years. This company really hasn't done what it's supposed to do, keeping up with the semiconductor industry. You have names like NVIDIA, like TSMC, like an AMD, even a Broadcom, and all of these companies have significantly outperformed Intel. And so really there's no real reason why I think you shouldn't come in here and pick up shares in the broader based SMH ETF rather than Intel. When we take a look at these numbers, client computing group, actually a bright spot over at Intel. Revenues for that segment was up 33%, up to $8.8 billion. And then operating margins in that business also growing substantially, now up to 33%. Last year, you were just at 8% operating margins. So this business segment growing pretty rapidly, pretty healthy on an operating margin side as well. As we move down, data centers and AI, this revenue was down nearly 10%, down to just $4 billion, with operating margins coming in at 2%. Guys, there couldn't be a absolutely clearer sign that NVIDIA is eating Intel's lunch when it comes to data centers and AIs. If you pull up the income statement for NVIDIA, these revenues are growing somewhere around 200%, with operating income growing somewhere in the thousands of percent. Meanwhile, you have revenues over at Intel down 10%, with operating margins declining and just minuscule operating margins and operating income. Data centers and AI really not doing well over at Intel. They're absolutely getting beat out by the likes of NVIDIA there. And then when it comes to network and edge group, even this revenue is down 24%, down to just $1.5 billion. Operating margins coming in at just 1%, basically not profitable from an operating perspective. Here, I'm sure Intel is getting beat out by the likes of an AMD, even again from someone like NVIDIA. Just really not a business segment that's doing really well over at Intel. And then when it comes to foundry services, this is really where Intel is looking to invest heavily. They want to become their own manufacturer for their chips, similar to what Samsung does. Samsung designs and manufactures chips, and then you have TSMC, the largest foundry play that is basically a pure play on manufacturing. They manufacture all of NVIDIA's and AMD's chips. So revenues for the segment up 63%, very solid. But when you see just how small it is, just at 290 million, and then on top of that, with negative operating income and negative operating margins, this company on this segment will bleed, absolutely lose a ton of money for the next, you can call it 3 to 5 to even maybe the next decade. Building up a foundry services is certainly not easy. You can ask anyone at TSM just how capital intensive building a foundry service really is. And over the long term, this could be a way for Intel to bring down their manufacturing costs and then keep technologies in-house. But I think for the next foreseeable future, and that is 2 to 5 years, I think the foundry services will continue to lose money and those losses will likely accelerate. And especially when you have a company that is sitting on roughly $46 billion worth of debt already on their balance sheet, and just $7 billion in cash, $17 billion in short-term investments from a balance sheet perspective, really not looking all too good. They have a fair amount of accounts payable, and then again, $47 billion worth of debt for a company that's investing heavily in a foundry services business that will continue to cost them just an absolute boatload of their cash. On top of that, you have declining revenues on both network edge and then data centers and AI. They talked about AI quite a bit on that conference call, really not proving to be all that effective over at Intel. Certainly it's not translating to revenues or operating income over at Intel. When it comes to cash flows, on a 12-month basis, they pulled down just $1.6 billion worth of net income. Last year, you were closer to $8 billion of net income. You add back some depreciation, slightly higher in share-based compensation, which is, in my opinion, absolutely ridiculous. And so you have just $11.5 billion of operating cash flows, out of which they spent nearly $26 billion in adding to their property, plant, and equipment. When we say building out a foundries business is not easy, is capital and time intensive, this is what we mean. They spent roughly $25.5 billion in terms of property, plant, and equipment on just $11.5 billion of operating cash flows. And then on top of that, not really paying back a ton of debt. In fact, they have to finance a ton of that foundry business in the form of issuing more long-term debt, and then also diluting shareholders in the form of equity dilution. And so this company's balance sheet not looking too good, and then they're investing heavily in a foundries business. They're doing a lot of that on debt and then on equity. So you're probably paying quite a bit of interest down the road over at Intel, considering how much debt you've issued. Now, the shares have rallied over the past year. Don't get me wrong. The stock is up still 60% over the past 1 year, but as we saw, it's basically kept in line with the SMH broad-based ETF over the past 1 year. Really hasn't outperformed it all too much. And the market, keep in mind, is always forward-looking. And so Intel posting a pretty solid Q4, that was likely priced in back in September and October. Now, as the market looks ahead to their guidance of just 13 cents on that bottom line, and then $12.2 to $13.2 billion in revenues, really, where will the growth come from over at Intel? They're losing out on market share to NVIDIA, to AMD. They talk a ton about AI on their conference call, but really having no meaningful impact on their business, at least as of yet. Maybe down the road, certainly it could have an impact, but I think that's still a long ways to go. And then from a foundry perspective, this company is spending a ton. Personally, I would rather pick up shares of TSM if I'm looking for just a pure play foundry business. They have a very wildly successful and profitable foundry business already set up that they are looking to expand in Arizona. And so Intel doing a ton of things, but none of them really well. It's basically second or third best in everything that they do. And really that won't cut it, especially when you have competitors in your field like an NVIDIA, like an AMD. I think this stock is coming back down closer to $36, $37 a share. Could still be in this uptrend if you are looking to pick up shares in Intel. I think your first spot is $38 and then lower at $36, $37. I think from a technical perspective, could see a reversal at that point. But really, if you are a long-term buyer and holder, I would much rather just pick up the broader base semiconductor ETF. You get a large exposure to NVIDIA, and then you also get exposure to the names like TSM, like AMD, like Broadcom, ASML, and then you get a little bit of exposure to Intel, which in my opinion is honestly more than enough. That was my take on Intel Corporation. A decent Q4, but actually their guidance spilled the beans and kind of spoiled these results and just showed that they're absolutely getting destroyed by their competitors in the space. Also not really trading at that cheap of a valuation. You're basically looking at 30, 34 times forward price to earnings for this one. You have NVIDIA roughly around the same forward price to earnings that is growing at a much faster clip, at least for now. And then maybe down the road, that can slow down over at NVIDIA as well. But I would much rather own NVIDIA or AMD, even though they're slightly more expensive than an Intel Corporation. That was my take on Intel. Next week, we'll have AMD's earnings. We'll be sure to cover those on this channel. Stick around for that. Let me know in the comment section below your thoughts on Intel, whether you're coming in here, picking up shares on this drop down to $44. As always, thanks so much for listening, and I'll catch you guys in the next video.